Hello, traders. It's Friday, October 7th. We're about 2 hours into trading. Today, I'm going to be focusing on bearish trend days. How do we identify them? And what's our mental state? What should we be looking at? How should we approach these days? Very, very important. I get asked all the time, Pete, I have the biggest problem exiting trades. I always take gains too early. So I'm going to address that issue because it's very important to put market context into the equation. That is going to help you identify when you should ride your winners, when you should be more passive with your targets. Let's start off with my last pick of the day, FSLR. That was a bullish pick. It came out right here. And you can see this beautiful breakout that we had on a daily chart and how the stock was starting to poke through it. Here's what I really like about the stock longer term. Look at this beautiful compression here. What has the market been doing? Down, down, down. That is a sign that institutions are in here buying it. Call a spade a spade. Was this a good pick? No, the timing of it was not good. And I'm going to get into that as well because I felt that a market bounce was pending and that this stock would have a chance to add to the gains. Unfortunately, didn't get the market bounce. And there is important information in that as well. So let's take a look at what happened. FSLR, I still like it. I think it sets up very well for out of the money bullish put spreads when the market is finding support. Right now, we're not seeing it. So let's take a look at the action right now. Let's get our bearings. This is a bearish trend day. How do I know? There have been major support levels that have been breached along the way. We get a gap down, stacked red candles down to the low of the day, and now we're getting a bit of a bounce. So yes, this is a bearish trend day. I'll get into that in just a second because I want to zoom out. Very important to always start with a longer term perspective. So here's how things have been setting up. This is a very strong, very steep downward sloping trend. I've highlighted, and I might as well put them up. Let's go through all of the information, put up the Bollinger Bands, and we're going to be looking at those with the standard defaults, 14 days, and a 2 standard deviation. When you get the SPY riding these lower levels, you get a bounce, you get a retest of that low, and the market closes above it, you tend to have a release, and this is a good opportunity to take profits on short positions. Longer term downtrend still intact, we're simply going to cash and waiting for an opportunity to reload. Similar formation, bounce. Similar formation, bounce. Similar formation, bounce. Similar formation. Uh-oh. Yesterday was the key day. Yesterday I was suspecting a gap higher. That would have been consistent with this pattern, been riding that lower edge of the Bollinger Band. Let's take a look at the action yesterday. It did not materialize. Why would it materialize? Well, because the market is in deeply oversold conditions and because at some point you're going to have bearish speculators taking profits. So we had that big rally up Tuesday. Then Wednesday we had this gap down, and this was a beautiful trade I was able to capture, and we had a big reversal. So this should have excited buyers. We had a big day the prior day. We tested the bid, we rallied, we closed near the high. That's what left those two long green candles. That's why yesterday we should have gapped higher. When we didn't, stack green candle, stack green candle, stack green candle. Uh-oh, bearish hammer, not quite up to that high. Warning sign. So we would have expected that gap higher. We would have expected early strength on any kind of dip when that did not materialize. And instead, all day long, the market sold off. That was a big clue. That was a clue that yes, the table is set for buyers to come in, have some confidence that support has been established, it's been tested, it survived that test. Now it should be go mode, especially ahead of earnings season. Not so fast. And then we drift lower the entire day. When we have a pattern that should produce bullish results and it doesn't pan out, that's a warning sign because the table is set for the market to move higher and sellers are taking advantage of any bid. So continual grind lower. So this morning we have a completely different set of technical indicators. We have a pretty big breakdown right in here. I'm going to right click. I'm going to remove the Bollinger Bands so that we don't obscure the chart, and we'll get rid of those. And now we can have a nice clean look at what's going on today. So you come in and you're all hot and bothered because I just feel like the market's going to go down. You do have a choice on the open. You can short the open. I don't advocate that for day trading because oftentimes those early moves are head fakes. So on this big move lower, you see these stacked red candles with little to no overlap. This is very heavy selling pressure. Zoom out, take a look at the 30-minute chart. Yes, we have broken key technical support. You can see that horizontal support. Remember that nice, big, beautiful rally that we had earlier in the week? Gap up, gap and go, close on the high. There's the open. We have just given back all of those gains. So this is a significant move lower. That confirms that this is likely a bearish trend day. Plus, we have those stacked red candles. So your mentality going into the day, and I explained this in the chat room, there are a couple of different types of traders. And one I would categorize as the nervous Nelly. The nervous Nelly comes in typically undercapitalized, over leveraged, not confident, not a great win rate, trying to learn how to trade. Well, if that trader comes in, they shouldn't trade the open, first of all. But if they did trade the open and they got it right and they shorted in here on this first bullish engulfing candle, you should be out, especially on a bullish 1OP cross, because you need to take profits as quickly as you can because you are a nervous Nelly. You could, in the back of your mind, say, hey, this is a bearish trend day and I'm going to ride this trade out. The problem with that is you're a nervous Nelly. And when you start getting this rally in here and then you get another rally, oh no, you start thinking about, I could have made so much dang money if I would have just gotten out on that low of the day. God dang it. And so you exit here with marginal gains. How do I know they were marginal? Well, did you short here, here? If you did, okay, you got this long red bar. But if you started to enter anywhere in this red bar, you've given almost everything back on those gains. You've got another type of trader. It's the seasoned veteran who sees this as a bearish trend day, and they are willing to stick with their positions and ride them out through the course of the day because they identified this as a bearish trend day. They have a high level of confidence. They have plenty of excess capital. They've got a good win rate. When they see a bounce, they're expecting one. They don't want to unwind all of their positions. They've got too many dang short positions on to worry about a little bounce. In fact, when they get a little bounce like this, they're going to be evaluating it. And they're going to be saying, hey, you know what? Look at this. These are mixed overlapping candles with lots of retracement. This is not a strong bounce. I am going to add to my short positions here on the notion that we have not seen the low of the day because this is a bearish trend day. That's the other extreme. Most of you are going to fall somewhere between the one extreme, the nervous Nelly, and the super confident trader who's seasoned and who has been around. So we get this bearish 1OP cross right in here. And I had mentioned to members that I'm only going to do one trade today. It's just going to be an exercise, and I'm going to be waiting for that one trade to set up. So the scenario that I outlined is that you get a bounce in here, and I asked, when is the best short of the day going to surface today? And I expected most members to answer with some type of technical analysis. It's going to be when this bounce stalls and then you start getting a bearish 10P cross. You start seeing tiny little candles, wicks above the candles, bearish hammer, upward sloping trend line breach. Those are all valid. And those are things that you would be looking for when you're shorting. But the answer that I was really looking for is the best short that's going to set up today is when the bounce looks real. And when bearish speculators start to exit their positions and bullish speculators start to buy. That's when you know you're going to have an excellent shorting opportunity and you're going to get that final leg lower. So, given that I only have one trade, upward sloping trend line, nice big bearish engulfing candle, bearish 10P cross, would I have shorted this? Yes, I would have, but I've only got one trade today because I'm confining myself to that parameter. So now you've got this upward sloping trend line. Ah, Pete, you missed the move. Now what are you going to do? Well, now if I've only got one trade, I have to wait for that breakdown and I have to wait for follow through because just trading the breakdown itself is no good because you could easily have a nice snapback rally. And I've got a bullish 10P cross about to happen right here. So this would not be a good entry point for a short unless I see a long red candle through the low of the day. Then I'm willing to accept maybe a doji or two, but then I want to see follow through right after that. If I only see a long red candle through and it immediately reverses with a bullish hammer or a bullish engulfing candle, then I know that this is simply to trigger sell stops at the low of the day and that we're probably going to bounce and go back into the range. The other thing to look for and to be mindful of when you have bounces in a bearish trend day is the duration of the bounce and the magnitude of the bounce. So in this case, I got these nice long red candles. What I would want to see and what would tell me that the bottom of the market's going to drop out is if I get one or two green candles and then immediately reversing and a new low of the day. Within 20 minutes would be very bearish. Within a half an hour is certainly acceptable. That is bearish. When you start getting into a bounce that's lasting more than 30 minutes, this one's lasted almost an hour. Okay, there's support. These are signs of support. What are some other signs of support? Well, sell off, pause, sell off, and then retracement and tiny, tiny little candles in here. So very tenuous price movement. Does this mean that we won't break down? Does this mean that I can't get short here? Not yet. Let's see what happens. I got this bullish cross right here. Again, if I get some nice action and a long red candle that convincingly takes out that low, and then I start to see a little drift lower, sure, I will short the heck out of that. So I'm going to show you a day that we had back on September 29th, and it's always very helpful to go back and take a look at previous price patterns that happened in a similar backdrop. And so on this particular day, we had a gap and go, downside, and we had follow through selling, but it didn't come until later in the day. So as I scroll back to September 29th, you can see we've got the initial sell off, we've got the stacked long red candles, and then we have a reprieve, and I should be there very soon. Sorry for the delay here. So these are your stacked long red candles. Get a short reprieve right here. Remember, I said the key to hanging on to these positions, if you've gotten short here, is watch this bounce. Here you have half of that long red candle was preserved. Very important. Couldn't get above it. Only lasted about 15 minutes and then whoosh, new leg lower. Okay, now you get a bullish hammer, you're starting to bounce, you got a bullish 10P cross. Yes, you'd want to take some decent gains here because that is a whopper. So the other thing that I wanted to mention is earlier I had said, when is the best short going to set up? Well, it's going to set up when the bounce looks legitimate. You've got bearish speculators who are bummed out because now they've just given back a lot of their gains. So you're short up here and you're like, I don't care what the market does. I'm going to weather this heat and I'm going to let the market bounce and then I'm going to look for that next leg lower. Well, if you're a nervous Nelly and you short it up in here somewhere and you get a bounce like this, you're like, oh no, oh no. Long green candle stacked. Oh, here we go. This is good. Okay, this actually will attract a few short sellers in here. And then whoosh, another leg higher. So at this stage, you got these guys who were short thinking, oh gosh, this thing actually does look real. I think I'll buy some in here. You got these guys who were short going, I'm just going to get out while I still have some profit left, or maybe they have a small loss. So they get out, they puke their positions out. This is a bearish trend day. If you are a trader, your mentality is I am either in cash or I am short. I am not getting cute and I am not buying little bounces. I am focused on one or the other, cash or short. You're short? Okay. Take your gains. I'm in cash. Nice little rally. Okay, upward sloping trend line. Yeah, this all looks good. We're starting to retrace. Yeah, okay, I can get short here. This is a bearish trend day. How in the heck can you get short here after a drop like that? You can get short because you notice that this is a bearish trend day. You've had technical support breakdown, and you know that this is not the low of the day. This is a bearish trend day. I am going to have an opportunity, be it here, 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 to get out better because the low is not in. And that's the mentality that you need to have. And so that's what gives you the confidence to short up here. And then lo and behold, yes, we do take out the low and you have an excellent opportunity to take profits. So if you're a patient trader, first of all, if you're a nervous Nelly, I do not advise you to trade the first hour of trading. And you can look at this and you can lament that, oh my God, I just missed a really big move. I just don't have the nerve to do it. And then you short right here, and then you get that. Then you're really in trouble. Be patient. Recognize this as a bearish trend day. Wait for that bounce. Wait for that bounce to stall out. Have that mentality that the best short is going to come when the market looks like it's ready to have a really nice bounce, because you want those bearish speculators to puke their positions out and you want some bullish speculators to come in, because then when this reverses, it fuels the momentum on the downside enough so to take out that low. So let's find a bearish trade. I really hope this lesson helps you. Let's go back to the price action right now. Let's see if I've got a short setting up. I don't like this short in here. Well, why not? Because I've got just this tiny little drift lower. Peck, 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 peck at the low of the day. That's not what I want. What I want is I want a nice rally up. Oh, here goes the bounce. It's starting to stall. Long red candle, right through the low of the day, long red candle. Okay, that's excellent momentum. These tiny little candles, peck bounce, peck bounce, peck bounce, and then you get a nice little rally up. Shorting the low of the day is very, very difficult, and you won't see me do it very often. So what I would like to have is rally up, take out this high right in here, look like it's really going to go. Hey, this really is nice. Man, look at the way we attack that resistance level. Long green candle, long green candle. Then I think everybody will be in the mindset that we have a double bottom, the low of the day is in. Let's start to get long. I really like this dip. We're going to take out the high of the day. We're going to fill in some of the gap. That's the mentality that I want to see. Then I will know that I have an excellent short setting up. Right now, we're about 2.5 hours into trading. This short might not set up until 3.5 hours into trading, but I am expecting a lower low today. So watch for that. I hope this lesson helps you, because trading is very much psychological. It's a mental mind game. And I hope that this mentality helps you because it gives you confidence. When you're shorting in here, you're shorting with confidence, knowing that the low of the day is not in. That's what allows you to hold on to that position. If you are planning to weather the storm and you're short, then you know you're going to have to take some heat, but it's okay because I'm going to have another shot to get out here or even lower. I'm going to have an opportunity to add to the position at an excellent price. That's how we short bearish trend days. That's how we identify bearish trend days. So let's take a look. Let's see if we can find a couple of stocks. We're going to look on the bearish side, obviously, because of my market analysis and my market opinion. So I'm going to go into Royal Flush, and we're going to take a look at what we've got there. This means that all of the signals on the stock are bearish across all time frames. I'm going to start with a D1 chart because I'm looking for breakdowns. Apple, not bad. We've got that little bearish flag formation. Going to put up the major moving averages. And I'm just going to keep clicking. I'm looking for something really good. That's not bad. That was RBLX. Just continuing to click through. This is nice. KMX, CarMax, earnings, sell-off, tiny little bounce, half of the red candle preserved, resistance. What did the market do in here? Market was in rally mode. Remember the last few days we had some decent market strength. Bearish flag, see you later, new low. KMX sets up very nicely. I like that one. Shop. Just going through this list. There are a lot of good ones. Just looking for the right one. I gotta make up for the FSLR trade, which I still think will be good. PG, this is nice. New relative low, that's good. Steady selling, did not even bounce this week. PG could be an excellent one. Just going to look at Pop Bear, AMD. This is a beautiful bear flag formation here. There's your flagpole, little bounce, upward sloping trend line, breach to the downside on the low of the day. AMD looks really good. They lowered their revenue guidance 16% from what they had thought when they posted their revenue guidance. Not good, citing big fall in PC sales. Walmart got to get through that 100-day, and through that, when I see it, I set an alert so that when that is violated, I am going to get a pop-up and a good trade is going to be delivered to me on a silver platter. Really like that AMD. That was a nice one. KMX, that also looks good. I want all of the support levels to be breached. I do not want any support standing between the current price of the stock and below. So it has lots of room to fall. BB, not bad. Got a bearish flag formation here. Cheap stock. That one also could work, taking out that previous low. That also looks good. So I've got a few candidates to pick from. If I went into bear run, that's going to show me a lot of stocks in here. Just looking for anything new that I have. I think this is one I looked at yesterday. HRB is one that I highlighted in the Twitter presentation that I did yesterday with Harry. You can see that actually turned out very nicely. Follow through today. Yeah, it's going to be probably KMX. I just like that a lot. I want to look at that 5-minute chart also and see what that is offering. Little bounce right in there. And you can see how the market is bouncing right in here. So this bullish 1OP cross, the low of the day holding, want to see that rally, want to get everybody thinking, hey, the low of the day is in. It's not in, not as far as I'm concerned. So the next bounce will probably present a good shorting opportunity. Boy, just continuing to flip down these. I really like that AMD sell-off. Plus, it's got a fundamental news piece on it that it's going to be missing. And let's take a look at this very quickly. All right. KMX, Roku looked okay. RBLX. RBLX has got some nice downside to it. Gosh, I've got to make a decision here. I know PG looked pretty good also. LCID also looking all right. A lot of these are looking good, but I've got to give you a pick. So I am going to go with, I think I'm going to go with AMD. Let's see what AMD is doing. I want it near the low of the day, which it is. I don't want stocks that are bouncing a lot right now because the market's been in a steady drift lower. I do like AMD on the short side. I like this breakdown here. That's going to be your short pick of the day. More than anything, I mean, we've got a very volatile market right now. It's tough for me to record during the day. I'm day trading. I'm not swing trading. I have no clue what the market's going to do. We should have bounced in here. This is a really nice pattern, really nice formation. I expected us to have a nice gap higher. I even traded it. I was able to cover that for no loss when I didn't see the gap up yesterday. I didn't hesitate to cover that overnight long for a scratch. And then once I watched the price action unfold yesterday, I'm like, we're not going higher. We're going lower. We should have bounced and we didn't. There's a lot of selling pressure out there. Just one word on the jobs report. I'm glad that people have jobs because the Fed is going to continue to tighten. They're going to do that regardless of the job scene because they're going to stay steadfast until they see inflation come down. Hourly wages plus 0.3%, not super inflationary, good in that sense. But when people have jobs during this tightening cycle, that is good because at some point we're going to see that decline. The longer we can get through this tightening cycle without having a recession, the better. Because if we go into a recession very, very quickly, I'm afraid that we could see some type of credit crisis because there are warning signs, global warning signs starting to surface. So I want strong jobs numbers while the Fed is hiking rates, even if it means that we might see some temporary market declines. Good luck with your trading. Please leave your comments. They fuel me. They motivate me. If I don't have them, I'm less likely to do these videos because I don't think anyone's listening or watching. Thanks so much. We'll see you soon. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.